Hello, members one and all of the Salivation Nation. This is an article sent to me by one Donald in New Mexico, and thank you for sending this to me. I actually had read about this from other sources, but it's not been talked about a whole lot here, at least on the general precious metals community. Some of the larger channels have talked about it a little bit, but thought this is quite interesting. We'll kind of take a look at this article and kind of get an idea about what it really means. A complaint filed on September the 6th in federal court in Illinois by the Commodity Futures Trading Commission alleges Newport Beach, California precious metals firms and their affiliate firms defrauded thousands of customers out of more than $290 million from illegal off-exchange retail commodity transactions. In other words, I guess that was a fancy way of saying manipulation. The allegations touch on transactions involving gold, silver, platinum, and palladium from approximately 12,000 accounts between July 16th of 2011 and March 2017. The 32-page complaint names as defendants Monex Deposit Company, Monex Credit Company, Newport Services Corporation, and the firm's principals, Louis Carabini and his son, Michael. In a prepared statement September 6th, Monex officials denied the allegations contained in the complaint. The CFTC complaint urges that the defendants, acting individually and collectively, deceptively promoted leveraged sales through its Atlas Commodities trading program as a safe and secure, profitable way for retail customers to invest in precious metals. According to the complaint, approximately 90% of the leveraged Atlas accounts lost money between 2011 and 2017 dates. Monex is alleged to have inflated the profit potential while underrepresenting the risk of losses, according to the complaint. The complaint explains that the Atlas program is structured in such a way that customer losses are all but inevitable. Losses from the Monex stands to gain through outsized price spreads, commissions, and interest on loans and administrative fees. To take just one example, Monex price spreads for a single trade can be 100 times larger than the price spreads for a smaller trade on a regulated exchange, according to the complaint. During the specified period from the CFTC's allegations are rendered, Monex executed approximately 140,000 trades from affected accounts. Monex permits Atlas account holders to trade on leverage or on margin, with Monex helping to finance a portion of its customers' trading positions. And the article kind of goes along, and at the very bottom it talks about a couple of specific cases about a North Carolina woman who invested $173,500 from the $400,000 she received from her son's government-issued insurance policy while he was killed serving the U.S. military, and almost all of it was lost. Then a 77-year-old Texas man invested he and his wife's entire life savings in $400,000. In April 2013, the client received back only $8,900 from his investment. Wow, that's awful. A 54-year-old Newport Beach, California woman invested her entire $1 million retirement savings in August 2013. Within 18 months, the Atlas account lost $760,000 from the initial investment. You know, what's fascinating about this is that, the number of accounts and the number of layers, leverage on margin, and this Atlas account, and these commodities, and all these different layers, it seems like, that's involved in these. Price spreads, ways to hide money and the trades, and you're not actually, doesn't seem like you're actually holding the physical metals. Even if they would have sold these for a high premium and they got the physical metals, yes, they would have lost their money, or lost some money, like I did when I cashed out my IRA and bought precious metals. I lost a lot of money on that, but I got the physical metals, and it wasn't the bullion dealer's fault. That's just the way the spot price goes. But however, in some way, because this occurred in such a long time span between 2011 and 2017, this manipulation and over-promising and everything like that could have had an effect on the price of precious metals. So the fact that they looked into this is good, and maybe the regulators will keep a closer eye on the markets in these cases. And there's so many different the paper markets that are out there. It should really be criminal. These futures trading and things like that, where you have all these paper trades, and if you can't cash them out for the physical, what good are they? I don't really, and again, I'm speaking somewhat out of ignorance in that case, because I know some people have talked about how the ETFs are out there, the paper markets and the futures. I guess is for what trades have yet to be, what the price will be for gold or silver, and they're betting on that. But the thing is that the actual paper transactions have got to come back to represent physical ounces of some sort and be able to cash those in. And there's so many more of them that are out there that don't represent it. Manipulation is real. This is just another example of it. And the fact that there's a crackdown here may send ripples. And if those ripples go out, that may mean that prices could go up to some more realistic levels. We shall see. It'll be quite fascinating to see how this turns out from the complaint filed. And so we'll kind of keep an eye on this. But post your thoughts below on what you think about this development. I'd like to extend a multitude of gratitude, y'all, for watching. I encourage you to please rate, comment, and subscribe.